Getting paid by international clients in South Asia feels like dragging your money across sandpaper. Before it hits your bank, a huge chunk just vanishes. You are effectively paying a penalty for being based in India. When using legacy platforms to bring dollars or euros home, you lose nearly a tenth of your revenue to fees. On a standard $1,000 invoice paid through PayPal, you immediately lose a 4.4% receiving fee. Then comes the conversion damage. Legacy gateways bake in a hidden forex markup, taking another 4%. Your $1,000 hits your Indian bank at $910. That $90 loss is a convenience tax paid to avoid migrating from outdated payment rails. Sticking with a brand name you recognize is comfortable, but that comfort costs you nearly 9% of your top-line revenue on every transaction. The logical next step is a modern alternative. For most creators, that means setting up Stripe. Stripe is available in India, but it is built to process domestic I&R payments from local Indian buyers. Stripe fails for global commerce. An Indian entity cannot directly accept foreign currency and receive INR. You're forced into a complex detour, incorporating a US or UK offshore LLC. For independent creators, managing foreign tax filings just to process a card is unworkable. Since Stripe isn't the fix, you must look at tools actually built for this market. Choosing the right one forces a structural decision. You can adopt bare-bones payment infrastructure or migrate to an all-in-one creator ecosystem. Picking the wrong path leaves you either wrestling with manual software integrations or paying for features you'll never use. Pure infrastructure tools are designed to move money across borders with minimal friction. This matrix compares them to legacy platforms. Tools like Wise and Skydo charge a transparent fee and use the mid-market rate. On a $1,000 invoice, your real cost drops from $90 with PayPal to roughly $15 to $30 with these platforms. That reduction in fees comes with a specific operational trade-off. These tools are strictly back-end plumbing. They offer zero customer-facing storefront features. You won't find checkout pages, video course hosting, or community platforms here. They also don't support local payment methods like UPI for your Indian audience. Pure infrastructure protects your profit margins, but it leaves the burden of building and connecting your digital storefront entirely on your shoulders. If you don't want to duct tape 5 different software subscriptions together, you take the second path, the bundled ecosystem model, like Playto Pay. This scorecard shows Playto's tiers. For virtual bank accounts, like a US ACH transfer, Playto charges a flat 1% fee with zero forex markup. For credit cards or Apple Pay, the base fee is 4%, but the forex markup remains strictly at 0. Eliminating that hidden exchange rate spread means that even on this consumer tier, you keep significantly more of your money than you would with PayPal. Cost isn't the only factor. To receive foreign currency in India, you legally require a Foreign Inward Remittance Advice, or FIRA document. If your processor doesn't generate this automatically, you will spend hours chasing your bank just to file your GST and income taxes. Playto handles this automatically. An ecosystem model anchors your business to one software suite, but it solves the puzzle of global checkouts, currency conversion, and tax compliance simultaneously. The correct tool for your business depends on how you generate your revenue. If you are a freelancer or agency sending large, manual invoices to international clients, your priority is minimizing the spread on wire transfers. In this scenario, Wise, Skydo, or Playto's virtual bank accounts will all serve you well. You can pick based on which interface fits your workflow. But if you are a digital creator selling courses, templates, or memberships to a global audience, your needs change. Using separate platforms for hosting and payments is inefficient for this model. The Playto ecosystem is the clear choice here, because the creator tools and the cross-border payment rails are built into the same platform. We also have to consider creators operating in Bangladesh, Pakistan, and Nepal. These regions are functionally locked out of standard tools like Stripe. This makes compliant platforms like Playto the only functional route for these creators to conduct global commerce without violating terms of service. The infrastructure for low-cost international business now exists. You just have to overcome the inertia of your current setup, migrate your systems, and stop letting legacy platforms drain your revenue.